What if I told you the world isn't drowning in debt by accident, but because debt is a business? What if countries don't to go into debt because they're really weak, but because a hidden system quietly pushes them into it? A system that turns every loan, every crisis, every crash into silent profit for a small group that almost no one talks about. Here's the shocking part. Every country on earth owes money. Every government spends more than it earns. Every currency loses value over time. Yet a few institutions, banks, central banks, and global lenders become richer and stronger no matter what happens. So the real mystery isn't, why is there so much debt? Who created a system where debt creates endless profit? And how do they keep it running? By the end of this video, you'll understand how the debt system was built the moment money stopped being real, why every crisis makes the same people richer, and why we are now approaching a global turning point. Let us break the silence. Let's expose the machine. Origins: how debt became power. Debt has existed since ancient times. People borrowed grain, animals, or work. But that wasn't a system. The real transformation started in medieval Europe. The Medici discovery, the Medici family, one of the richest banking families in history, found something nobody had understood deeply before. If you control debt, you control power. They loaned money to kings, they financed wars, they funded governments. And every loan created dependence. But they had one massive problem: gold. They couldn't lend more gold than they physically had. That meant growth had limits. To create a global debt machine, something bigger was needed. 1694, the real beginning, when King William III of England needed money for war. He was nearly broke. Private financiers offered him a deal. We'll lend you the money if you allow us to create banknotes backed by your government's debt, not gold. And he agreed. This moment created the first true central bank money backed by government IOUs, the idea that debt could act as money. This invention became the foundation of modern banking, government bonds, national currencies. Fractional reserve banking, global finance as we know it, a repeating cycle was born. Banks lend to governments. Governments spend the money, citizens pay taxes so governments can pay interest, banks profit, governments borrow more. The cycle continues, a smooth, self-sustaining loop. But gold still limited it, until gold disappeared. The day money stopped being real, skip forward to 1944, the end of World War II. Bretton Woods, the dollar becomes king, the world built a new system. The US dollar would be tied to gold, every other currency would be tied to the dollar. This made the dollar the center of global money, but it also created pressure, because the US kept printing more dollars than it had gold to back them. By the late 1960s, countries noticed gold started leaving America fast. Confidence collapsed. 1971, the most important money day in modern history, President Richard Nixon made a shocking announcement. The dollar would no longer be tied to gold. Overnight, money became paper with no physical value. Every major currency became fiat, money backed only by trust. Governments could print unlimited amounts. Debt became the engine of the entire global system from that moment. Money stopped being something real and became something created. Debt equals money. Money equals debt. The machine was now unlocked, but it still had one more evolution ahead. It's the modern machine. Making profit from debt after 1971, banks discovered something new. If money is created when people borrow, then banks can create profit simply by issuing loans. Not for money they already have, but for money that didn't exist before the loan. This changed everything. Loans became assets. When you take a loan, the bank creates new money. Then the bank earns interest for years. Your debt becomes their profit. But then came the biggest shift of all: securitization, turning debt into products. Banks realized they could create debt, bundle it, sell it, and start again. Mortgages, student loans, government bonds, car loans, credit card debt, all became products to sell. Debt became the most profitable thing in the world. Governments loved it too. They could borrow endlessly without raising taxes. The machine was now global, unstoppable, and more powerful than any government. But every machine breaks eventually, and this one breaks in cycles. Breaking points. Crises that made the machine stronger. Here's the twist. Debt crises don't destroy the system, they feed it. 1980s Latin America countries borrowed heavily. Interest rates shot up. They couldn't repay. Economies crashed. Who profited? International lenders who restructured the loans and collected interest for decades. 1997, Asian crisis, currencies collapsed, markets panicked. Foreign lenders bought companies and assets at rock-bottom prices. Profit again. 2008, the global financial crisis. This was the moment the machine nearly collapsed. Banks had created too much debt. Subprime mortgages, derivatives, toxic financial products. When it all blew up, governments stepped in and used more debt to save the system. Central banks printed trillions. Interest rates dropped to near zero. The machine didn't die. It transformed. 2020, the pandemic money explosion. More money was printed in 1 year than in the previous 40. Global debt shot up to historic highs, and the machine reached full power. Fallout. A world built on unpayable debt. Here's the truth. Global debt can never be repaid, not because countries are stupid, but because the system needs the debt. If all debt disappeared, the money supply would collapse. The system requires constant expansion. Debt grows faster than wages, government, revenue, economic growth, real productivity, population, which means 1. Permanent inflation. Prices must rise because money supply must rise. 2. Permanent wealth transfer. Borrowers pay interest. Lenders collect it. 3. Permanent government dependence. Countries can't operate without borrowing. 4. Permanent instability. Because debt grows exponentially, the economy does not. Every generation gets bigger debt, weaker currency, slower growth, more inflation. This is not a bug, it's the blueprint. Why all fixes failed? Governments tried everything: spending cuts, tax hikes, stimulus, austerity, regulations, deregulations, printing, tightening, reforms, resets. Nothing worked. Because the problem isn't policy. The problem is the architecture. You can't fix a system designed to expand endlessly. You can only delay the consequences. Modern parallels. Today's shocking numbers. Let's connect history to today. Global debt 2024-2025. Over $315 trillion. That means $40,000 debt per human. 3 more debt than the entire global economy creates in a year. A number rising faster than ever in history. Government debt is exploding. Us. $34 plus trillion. Japan. 260% of GDP. Italy, France, UK, China. All near record highs. Corporate debt at record highs. Consumer debt at record highs. Yet nobody panics. Because everyone, governments, banks, financial markets, depends on this machine. The cycle repeats. Debt rises, crisis hits, bailout, comes even more debt, even bigger bailouts. The system can only move forward by getting bigger. Who benefits from all this? Every dollar of global debt pays interest to someone. Here are the winners. 1. Central banks. They control interest rates and earn from government bonds. 2. Big banks. They create loans and sell debt products. 3. Global investors, bondholders, pension funds, hedge funds. 4. Shadow banking system, private, unregulated financial giants. 5. International institutions, IMF, World Bank. They lend to nations and collect interest for decades. The losers? Everyone else. Workers, taxpayers, consumers, indebted nations, future generations. This is why the machine feels invisible. It works in plain sight, but is almost never explained. What comes next? There are only 3 ways a debt-heavy world can end. 1. Inflation spiral. Money becomes weaker and weaker. 2. Financial reset. Currencies change. Debts get restructured. 3. Default cascade. Countries or banks fail, causing global shockwaves. No outcome is smooth. But understanding the machine helps you prepare. Final section. Takeaways. Warning. Takeaway 1. Debt is the heart of the system. Money today is not backed by gold. It's backed by debt. Without debt, the system collapses. A takeaway to crises. Strengthen the machine. Every crash makes the financial system bigger, not weaker. Takeaway 3. The system is reaching a limit. Debt can't grow faster than reality forever. A turning point is coming. The warning: we've entered the acceleration phase. Debt, inflation, and instability are rising faster than governments can control. The next decade will reshape the world economy more than the last 50 years combined. Those who understand the machine will adapt. Those who don't will call it chaos. If you want more deep, simple explanations of the hidden systems controlling our money, subscribe, like, and share this video. Once people understand the machine, it can no longer stay hidden.